Let's see. All right, guys. So we're gonna jump right into it. I know it's still some people joining, so we're gonna let these people get in here as well. But I appreciate everybody jumping in. Um, as we see, the stock market is trying to sell off a little bit and pull back. But I was just going through looking at, kind of doing some research on why. And it seems like they're trying to so-called pop the bubble for AI, pop the bubble for some of these stocks that have really high evaluations or inflated PE ratios. And that's the price to earnings ratio. And every stock has one. So when you start eventually getting back down to fundamentals, there comes a time, even in the middle of a bull run, you will see the fundamentalists, the Warren Buffett's and these type people and other hedge fund managers, they'll look at stocks at a certain high evaluation where it looks like stuff is just screaming up and trading is very easy because, you can just buy the dip and it always works out. It comes a time when they start going back to the basics, getting back to the fundamentals, saying, okay, price to earnings, like, does this make sense for the stock price to be at this particular price or not? And so they'll look at the revenue, the forward guidance, and all this stuff like that. They'll look at the economy. They'll look at liquidity in the market. So they'll look at liquidity in like the credit markets and, what position the Fed is and how the Fed is tightening or doing quantitative easing, which when they run off their balance sheets or buying bonds and things like that. And they take all these things in consideration and then they try to say, okay, well, based off all these things, Palantir should be at this PE ratio and at this stock price. And then they'll try to push the market down to meet, saying to realign with the fundamentals instead of being so speculative, right? And optimistic about pricing and the economy. So it looks like we're going to go through a little bit of that, especially with stocks like I'll say like Palantir, Nvidia, AMD, who have things coming down the pipeline. Like AMD has some great fundamental catalysts, but have they materialized in the actual balance sheet yet? When they have earnings, are they having Nvidia style beats yet? So they may have like partnerships with OpenAI, partnerships with Microsoft, and all these different things. But when they report earnings, are they growing? It has that hit the balance sheet yet? And if that answer is no, then Wall Street is gonna start cutting these type of stocks down back to reality, right? And so today we're going to go over some stocks that I want to look at and just see, which stocks kind of are in this position, and also go over kind of my mindset when I'm day trading versus swing trading and what I look for. So we was in the SPY. I got into the SPY chat today just for a little bit um, here, and so I dropped this post inside of the SPY chat. At this point, SPY had opened up and it pushed up, right? And so what Wall Street normally would do is they will try to push you up. If you can't really see where you are on the chart, they use this as a trap. So they let SPY break over the pre market high, right? It had a nice A plus type trade to get back to 81. However, saying if you're the type of day trader, for example, that had just the 200 EMA on your chart, right? Then you would have also saw SPY recapture the 200 EMA, which is the bottom half of this cloud, and you would have thought that price was finna get ready to shoot up. All right, but because my technique now for this, so that we don't get faked out, even when I used to use only the 200 WMA to remove some of false breakout stuff. Now I have all these different versions of the 200 wrapped into this cloud. So we had the 200 EMA, the 200 SMA, the 200 WMA, and a couple of more that's not that popular to form this cloud, right? So now that we know that if you don't get above this full cloud, that means you're still under one of those versions of the 200. Another thing that gave us an advantage to see that this run up was getting smoked out is when I saw the candle start closing under the WTMA, because the WTMA, even though they're trying to trap right here by giving a pre-market high break, you see that the WTMA has already kind of surpassed the candles. And then we got an arc candle right here, open and close candle without touching this green line, which let me know, okay, they're going to have to do some work, either stay up here long enough to get a fresh inverse arc and then mount to 200 cloud. Then 281 is on the table, 282. Or if they reject here, I said if they reject right here at this level and you get a fresh bearish arc, then you lose this 12 cloud, then you're coming back down into that 270, that 675 range. And so this was all done at, if you look at the time, this is at 9:30 in the morning. I put the whole thing out there, spy above pre-market high, but currently fighting the 200 cloud. Be on the lookout if we reject here. Price currently getting trapped under the WTMA. If we create a bearish arc and then lose the 12 cloud, that is a sign of weakness to push toward 675. If it flips the 200 cloud back to yellow, which means you would get an open close candle above that red 200 cloud. If it turns yellow, which means a candle, the price dominating that cloud, that's a sign of strength. Then we'll be looking to test 681. And we see here, we look at the price action, we got a bearish arc rejection inside of the 200 cloud. We lost the 12 cloud. It flipped red. Price is just slipping down. So there's only two things that could happen here. Well, the other thing could have happened is they could have just consolidated here all day long, but it didn't. And you see we lost the 12 cloud. Our VRVP is wide open, and you saw SPY was able to drop like it did today. It was able to go ahead and drop down. Let's go back to the 5-minute chart. It was able to drop pretty low, hit the 275 target, and now even in the after hours, it's back down here where I said in the during the session that our next liquidity levels based off the WTMA, which is our advantage, uniquely for us, I can map out liquidity using these horizontal lines and know where stock is going to sweep liquidity at. So it's coming down here now. It's testing this 672 level, and then it'll come down to 671. What I'll be looking for tomorrow for like more downside, if you start seeing price hold under this, you see how this is a bottom of an order block in the extended trading hours, but it's also a liquidity map level down here from the daily time frame. So this either a 3-day or a 1-day WTMA liquidity level. So if we lose this, start holding under here, you see that they're gonna try to push us down back into these lower ranges, right, on SPY. And so right now it's stopped. It came back down, not by a chance or like just by luck. Price stopped right here before it hit this liquidity level. And it's gonna come down here tomorrow. It's probably gonna try to grab liquidity and try to push back up to whatever the pre-market low is. But if it starts holding under these order blocks and these liquidity levels with open and closed candles, that's extremely weak. Okay. So we'll be looking for that tomorrow. Um, but when you're reading your chart, you have to start looking and paying attention to, where stuff is on your chart and just read the story, because it's going to tell you how price is going to respond. And this is why, coach, when I'm looking at prices, and I looked at Palantir today and I said it's going to come down and it's going to grab liquidity and then push back up after it grabbed liquidity before market open. I think I was I forgot what time frame I was on. I can go look right quick. But I want you all to start paying attention, because this is something.
2 hour time frame.
A 2 hour, okay.
Three hour.
3 hour time frame, 3 hour. Okay, you're right. I remember that now. All right, so let's go back to regular trading hours. So we were looking at, okay, what is Palantir going to do? And so this order block is here. Even though Palantir was bearish, right? When they tried to sell it off because of earnings, when you're looking at a stock rushing down, right? When it's rushing down for the first time, it's been all the way up here and it's just crashing down. but it's going to be the first retest of the same buy orders, right? That shot it up from this level 186 all the way up to 207. When it first came down here, I said when it breaks under 186.84, it's a high chance for a liquidity grab. Sell side, which means that these smart money investors are going to allow price to drop under this order block temporarily, right? And then if you see it get bought back up and pushed into here, they're just going to do a liquidity sweep, right? Now, what are we looking for on Palantir to look for more downside? You'll be looking for it to close under this order block. So if it starts closing candles under this order block and it loses these buyers right here, they're going to let it drop and come down here. Even if it kicks and screams, it stops right here at 185 and it pushes down and it stops at 180. Where their savior is, where their money is at, where the people that has positions for them already set to buy is down here in this range. So what you don't want to do, I don't care who has puts, I don't care if it's Michael Saylor or all these other hedge funds, when it gets down to this range, because it's buyers right here, you need to go ahead and make sure you are trimming or sliding your stop loss up to make it tighter so that if it just tries to jump back out of here, you don't lose a lot of your profit. You can just get kicked out, regroup, and then set another trade up. Okay. And so we'll be looking at, so Michael Saylor is a guy, the big short, he's shorting Palantir by a lot though. Like I think it's a crazy amount of money that he put into this Palantir short position. And he's eating good off of it because it's dropped down a lot. You know what I'm saying? So he's making good money. But one thing I also noticed about Michael Saylor, he risks a lot of money in his ideas, but he also exits out the trades quickly.
Michael Burry.
Michael Burry, yeah, Michael Burry. I think Michael Saylor is the Bitcoin guy.
Yeah.
So Michael Burry, yeah. So he short stuff, but what I'm saying, he will hold some of the position. But I also have seen him exit out and profit. And then everybody else still run off the news that he had a short position, but he's already won his trade. So since we can see where the order blocks are, you can go up to like the higher time frames on Palantir, and just kind of see exactly what needs to happen on the higher time frames, what they need to lose, where they have support at. They have a lot of support. It's going to be hard just to break under, this 180 level. They got support there. Let's see on the 3-day chart. You're losing the WTMA on the 3-day chart, but again on the VRVP, you have some decent support here. You see how you have this arc right here. If you were liquidity mapping that out, you can it's going to tell you where it's going to do a liquidity sweep at when it gets down to this arc here. So what is that? 179.01. So if it pushes down, you see how right here, how this candle's pushed down and then got bought up and then pushed up. You might see some price action where it pushes down on this liquidity level right here with the arc. What you want to see for it to go ahead and get into this range where you can make a lot of money on puts going down to the 50s or something, if it drops that low, is if we start having open and close candles under this liquidity level, right? If you start getting some open and close candles under here, then it can really drop. And so that's what you want to be looking for. So you want to do a liquidity map on them. So a liquidity map is very simple if you're new to the Wolf chart. This WTMA tracks live liquidity, right? And so what that means is that it tracks live money. It tracks when they're buying and selling in real time, it tracks them, just like it did on spot, even on that smaller time frame. When you saw that candle get inside, like this right here, you see this candle star, you see how this stock is popping up, and then you see how this candle got in the inside of it and it crossed over. It's showing you that, okay, they're smoking out the up move, just like I saw on spot. But when you see this happening, right? This is meaning that liquidity in the background is moving already, right? It's faster than these order blocks. And so it's showing you, okay, they're selling their Palantir position, or they're not in this trade no more committed like they were at first. And so we got the crossover here. And so at the top here, since we know that that's where they bought in at, or where they start selling it, you can put that liquidity level there, and it'll help guide you. Even if you don't have regular support and resistance levels, it'll help guide you. Just like here, if you zoom in from this liquidity level over here, if I come over to the right of it, you see how price popped up in this bullish move, but it swept liquidity. It pushed up at the first test of this liquidity level, or the top of this arc. It pushed up, swept liquidity, came down, swept it again, got an open and closed candle above it, and then Palantir was able to push up quickly. You see that? But they had to get this candle that opened and closed with the wick and the body of the candle above that liquidity map level to the signal that it was ready to push up. Prior to that, it just came up here and it was just sweeping liquidity at this liquidity map level, right? And so when you're doing Palantir, go ahead and do a liquidity map. You don't have to go down to the hourly time frames. Just do it to like, your 1 week, your 1 month, your 1 day is good. It's sufficient because you already have historical support and resistance lines on the chart to mess around with. These purple lines on my chart are what we did in the training from what was that, Sunday? Hold up, was that, yeah, Sunday? These were just auto fib levels in case Palantir went up higher, but apparently it dropped, right? And so here, this is like not a. I'll keep on putting these lines on the chart. This is not a good sign for Palantir right here. You see how we have a arc candle now. Now, what you can see happen, say Palantir bounce tomorrow, right? You're gonna see it. It's gonna still try to grab liquidity on the top of this green line if it did try to rebound. But as soon as we get that confirmation of that arc, when it crosses that red line, we're going to come down into these lower levels and try to test these levels here. So you see how we have all that volume on the VRVP. The way you really line it up efficiently, let me make this wider. What you want to do is, you see how we have an order block right here? You always want to line your screen up. The first candle to the left side of your screen, you want to line it up with an order block so you can get a real picture of the VRVP. You know what I'm saying? So right here, this is good enough because I have it on all the way back in July, and it's showing me the volume profile based off of all the volume and price action that happened from July 22nd, 2025 and on forward, right? If I want to go back further than that to include like more candles or a later date, so I can come to this candle. This is from April the 3rd, um 2025, but I'm starting at an order block, right? So when I had this up move, and it's been in the uptrend making um it's been making higher highs and higher lows for a while, right? We don't even have a change of character yet on Palantir, and all we've done so far is come back and did what tested a previous all-time high, right? Which is normal for a pullback. So you want to see it start breaking some of these important levels, like breaking under this liquidity level, losing this order block, things like that. Let me delete these. You want to see things like that happening to get like truly bearish on Palantir. You want to see, it breaking under these order blocks, closing under these order blocks and stuff like that, because it has a beautiful gap. Like if they really start trying to sell Palantir because they wasn't satisfied with the earnings, then it has a nice. Once it loses this order block, it's in an A+ trade, right? Let's look at what they think is worth. So they got the 1 year target at 184. So they only in the middle range. They have the max target of like 255 on it, which is crazy, right? So they have like a high target on here, and it's because Palantir's margins and stuff are really pretty good. Their balance sheet is always good, and so like they're pretty much best in class in what they do. So they always have like a pretty decent evaluation. So they but their PE ratio is extremely high. So we want to see them lose this liquidity level, and then you want to see that pull back into the where the money is down here on Palantir. Okay, but it's important that you do the liquidity map on your chart to make sure you can see enough information, even when you're day trading, because you can just easily transition down to the 15 minute, and you will have price action and levels to where you can see what's happening on the 1 month, the 1 week, the 1 day. And even though you're on a 15-minute time frame, like I can see, okay, this is a daily time frame liquidity level. It's respecting it, trying to bounce, it's trying to hit this order block. But so I can see too, if it loses this liquidity level, then I have a high chance I can play more aggressive going into 184. Like if I get a bearish arc and we start holding under 188, I can play down into this next order block with confidence because I know I'm breaking like a daily time frame level, right? If we come down here for the first time and it crashes through this order block, even if I'm on a 15-minute time frame or the 5-minute time frame, once it crashes through here, and if it creates an inverse arc and remounts this liquidity level, I'm confident playing it back up, these $2-3 or back to these resistant levels because I know that this is a daily time frame level, right? And so I can see that without having to flip back and forth between my daily, weekly, and monthly. I can quickly see a daily time frame liquidity level. And if I mapped it out from the 1 month on down, I can see all the time frames, even if I'm on a 5 or 3 minute or anything like that. Does anybody have any questions about liquidity maps while we're on this topic? Let me close back out.
Yeah, Sean, this is Fidel. I do have a question. So you're mentioning mapping liquidity on the monthly, weekly, and daily. Are those the time frames that are best for us to use in most scenarios?
Yeah, if you're trying to get your liquidity map, yeah, using the I personally use the 1 month, the 2 week, the week, the 3 day, and the day. My 1 month color. So I do one. Let me do a liquidity map, right quick, and so you all can see kind of how I do it. Let's look at something like I'll do Nvidia right quick. All right, so with a liquidity map, all you're using is the WTMA, right? So if I go to the 1 month, I don't really like that chart. Let's see. It's so high. Let's pick something that got I guess Palantir is pretty high as well. We'll do Palantir since they kind of a hot topic right now. So let's just look at Palantir right quick. All right, so I'm gonna take these field levels off. All right, so Palantir doesn't have a arc on the 1 month, so it's not gonna have a 1 month liquidity map. All right, so now if I go to the 2 week, they don't really have nothing on a 2 week. On a 1 week, they got one down here. So this was a 1 week liquidity map, so I would go here. Even though this is way back here, they probably never come back down to these prices, but my weekly color is blue. So and my thickness is 3. So this right here, this line 2 width, I would change that to 3 point. And then my color for my weekly chart, liquidity levels, is blue. So I'll flip that to blue. So I'm just putting a line on top of the WTMA and where it crossed it. So sometimes you see where this WTMA crossed that red line, I put a level here. It didn't do any arcs on the rest of the weekly. You see that it almost crossed over, but it never really crossed because it just stayed in this little uptrend. And so then I'll go down to the 3 day. My 3 day chart color is orange. So I will come back here. I'm gonna flip this color to orange. And so I'll go to the top of the WTMA here. And then here, the bottom of the arc right there. And so now you have these 3 levels, right? And I'm gonna put this size on 2 points. I'm gonna come back through here and change this one to 2 points. It's on 2 points. All right, then I go to the 1 day. And all you're doing, like I'm saying, you just capturing the top of the WTMA where the transaction happened that caused the price to drop. It has one right here, just a small one. I'm gonna grab that one. And then here, they got one back here at 124 and another one here, right? And I'm gonna get this one right here just to have a one where they had a big move. So now that I have this on my chart, all this does is just put a higher time frame liquidity levels on your chart. So it's a technique that I made up to track liquidity. They got indicators that'll put like a bunch of stuff on your chart that's trying to show you like liquidity, but I'm able to track liquidity with the WTMA and these arcs, right? And so now if I go down to the 5 minute, for example, and say I was day trading and I was using my pre-market high and low levels, right? So now if I come in here and I look at Palantir price action, you can look at, like, for example, here at the bottom of even though this was a liquidity level by itself because it's pre-market low, you can see how the price action come down to this daily time frame liquidity level here during the session, right? It came down to this liquidity map level here and the pre-market low, then created the inverse arc, popped up. We got an open and close candle under the liquidity level here and pushed down. It pushed up and respected. You see how the wick is coming straight to that orange line right here? It came and respected it here. And so you will see your charts interacting with these levels as you're coming down to them. Like here, you know this is going to be an important swing order block because it has a daily time frame or a 3-day time frame liquidity level inside of this swing order block. So when it comes through here, it can easily grab liquidity and push back up and retest this bearish order block tomorrow. So when a session open up, say they gap down, say Palantir opens up and it's down in like 184. Because this daily time frame liquidity map level is right here, it's a high chance that it might gap down, but reverse back up, aggressively because it's gonna try to interact with this liquidity map level and try to reclaim this zone and then probably come up here and then reject or come up a little bit and then at least reject or grab liquidity here again and then lose this order block and drop. So the reason why a lot of times I can predict price action before it happens is because I know where the liquidity is on the chart. And liquidity is like a magnet to stock price. So when you have liquidity levels, the price likes to go to them because smart money needs that money in order to make a big up move or to make a big down move. So they run to the liquidity because this is how they trade. They don't really chase price actions. Billionaires and millionaires, they trace liquidity pools on the chart so that they can buy in or they can sell. So they look for like where the liquidity is. So they'll push price on purpose to that area so that they can grab liquidity and then make the move they want to make. But that's how you do a liquidity map. Palantir probably wasn't the very best example, but all you doing is going to the time frame and drawing your liquidity map on top of it. I use different colors on mine so that I can know the time frame just by glancing at the chart.
Let me take a look at Meta,
Sure.
please.
Hey, Sean, when you do liquidity, you're on extended hours?
No, this is on extended hours right now, but once you put your chart over the daily chart, extended doesn't work on a daily or the weekly charts. So it automatically turns off on a daily and higher. Yeah.
And Sean, you said you use which time frames for liquidity? 3-day?
I use the 1 month, 2 week, 1 week, 3-day and 1 day. Those are the ones I use. You don't have to use all those. You can use the 1 month, 1 week, and 1 day if you don't want a bunch of lines on your chart. But I use those because those time frames I just use a lot of time frames when I trade. Because we trade with order blocks, I use more time frames than probably the average trader uses.
Quick question. Are these different from the liquidity levels that you already have on the chart that are marked in blue?
Yeah, these are different.
Okay, and we don't use those in the same manner.
Yeah, you use those in the same. The previous day high, low, and stuff like that are natural liquidity levels, but these right here are more so where institutions have moved money at, basically.
Okay.
Yeah. Okay, so this is Meta chart. And so Meta is in an interesting position. It's extremely weak. So a lot of times when you're dealing with a stock, you have to really research what is the catalyst that's causing this stock to drop, right? Because when something's dropping and the catalyst that caused it to drop hasn't went away, Wall Street is going to look for a reason. Like, for example, when Meta was dropping a while back, right? When they was investing too much money into the metaverse and they wasn't getting a return to justify, fundamentally, why are you spending all this capital into the metaverse and nobody's really using it, right? It wasn't getting adopted fast enough to justify spending billions and billions of dollars trying to be first in the metaverse. And so last earnings, they had the same type of worry about them spending so much money. I think their CapEx budget, they want to spend like so much free cash on AI. Wall Street didn't like it. Even, they didn't like it. And so they dropped. So their earnings per share, saying their top number they missed on. And so they'll be looking for something from Mark Zuckerberg from a CEO perspective to say, we're going to cut spending here, or we're going to cut this many employees or something like that to justify how they're going to mitigate spending so much money on AI to compete, even to the point where they're raising money and things like that, trying to compete with other companies. And so that catalyst is what's, causing them to kind of pull back. The way I have Meta marked out right now is right now we're back at a level from May, right? Where they first, they pushed up, got to break a structure after this buy-in here. And they pushed from 622 all the way up to almost $800. Now they're back for a first retest of this order block. So I'm expecting a liquidity sweep, back under this this 222 level right here. If they push under that, they're probably going to push down for a second and try to sweep and reclaim this. What I'm waiting on to go long on Meta is I want to see them come down and sweep this weekly liquidity map level from the WTMA. If they can push down under 580 something and push down into this range between like 600 and 587 in this range right here, then I think that'd be a good, especially if they push under here and then they reverse back up and reclaim this zone. That'd be, to me, a decent trade, right? Because it's still going to be a dead cat bounce. The reason why I know it's going to be a dead cat bounce is because the WTMA is way up here and it's going to take it a minute to try to catch up. You see how the stock candles have front ran this down move. So it's so far, anytime you see candles get that far away from the moving averages, it's going to be like a magnet and it's going to come back up eventually and retest the WTMA or the 12 cloud once they get close enough. And stocks just behave like that. Anytime they drop like that and you see that big separation, it's clearly oversold. It's oversold. The RSI on their daily time frame probably is like in the under 30, in the low 20s or something by now. So I mean, you can tell by how far these candles are away that it's getting oversold on the daily time frame.
22.
So, yeah. Hmm?
Size 22.
Yeah, 22. So you see how far these candles are away from the moving averages. It's selling off, but it's more of it's a panic sell. Is it justified as far as what they're really worth? Is the question. And they have a crazy price target on there. I don't know if they're going to adjust it, but Meta's almost back down to the bottom of that range, right? So this is kind of where you want to, when it comes down to like 5, if it comes down this low, saying I'm going to buy, at least a earnings play, just one contract or something like that. I'm going to buy here definitely. Looking at the weekly chart as well, the weekly RSI I think is still in the 40, so it isn't like super oversold on the weekly chart. But if you look at the liquidity map level from the weekly chart, and I was testing out another technique as well. You see how I pushed back this VRVP? I took the extended node from the weekly time frame here and here, so that when I switch down to my like a 1 hour time frame, I can still see where the volume bars, where institutions have bought in, where their positions were bought in, aggressively on a weekly time frame with the VRVP, are these royal blue lines. So I was just testing out to see how price reacts to it. But you know, it's not nothing I have taught you all yet. I was just since I did that with the fib thing, I just want to see how price action reacts like that. It just made sense. And so anyway, with the weekly chart, you see how we're going to have confluence here. You know what I'm saying? At these levels that I said I'm gonna buy in at. Look how this is the point of control on this VRVP on a weekly time frame. Looking at this counter from September 2024, on this run up when they bought the dip, you know what I'm saying? This and you see how we have a liquidity map here, a VRVP level, the point of control on the weekly chart is sticking out in here. So if it comes down and sweeps in this range here, to me, it's a good opportunity to buy into Meta. Similar to here, you see how you got these volume bars here, right, from the point of control, right? And you push down and you swept liquidity on that first retest of this order block. This is the type of price action I'm saying. Like it can drop like it's dropping now, push down, leaving a lot of space between price and the WTMA. What you expect to happen, you see how price dropped so fast that it was far away from the WTMA at this candle. You this big gap right here. And then it swept liquidity. And then the first thing it did is it came back up and did what? Rejected at the WTMA first. And then it sold all the way back down. Rejected the WTMA, rejected, and then it finally mounted it. And that's how you knew the institutions had accumulated what they wanted to accumulate, and now they're ready to establish the trend. Same thing is probably going to happen here. You're going to push down. You want to sweep liquidity, right, in this range here. If the WTMA is far, say the WTMA has only come down to like right here, you're going to get that initial crazy 20, 30 point run up, but it's going to reject and push back down. And then this is when they're going to start trying to anticipate, you know, getting their earnings position. They're going to let it get beat up, but, you know what I'm saying, eventually they're going to want to grab earnings contracts and leap contracts and things like that. I'm just trying to time it at a position to where I know that they're going to probably defend this little order block right here the same way they did here. I'm looking for a liquidity sweep to buy in to, and then, you know, if we buy in here, when it does a liquidity sweep, let them get their position first, but shortly after we grabbing ours and let them accumulate. But we'll have earnings contract with like dead cheap, you know, dirt cheap contracts and low IV that I could play going into like next earnings. So I'll take care of Meta when it on this drop right here, right? So that's what I'm looking for. So I'm gonna throw a price note on here so you all can and I'm gonna post it. But like over here on your trading view where this T is, you can hit that price label, and you know you can throw some. Not that one. I don't like that one. Hold on. Sorry. This price note. You can throw a price note on your important levels, right? And you can, I mean, if you were doing like chart work, another thing that I do is you see how it kind of faded into this order block. You can put your mouse on top of it, right click, and go to visual order and hit bring to front. And then when you move your chart around or click on other stuff, it still will show up, right? And so that's what I'm looking for Meta. Like right now, it's at an important level. It's breaking under it. If it pushes down, sweep liquidity down here, I will be satisfied with my first entry there. Even if it pulled back some more, I'll be satisfied with this entry. If it closed a weekly candle under this level and it's finna just keep dropping, then I will probably get into puts and play the puts and during intraday. But if you look at this little level right here, you have a fair value gap that's gonna give you some extra buy orders. You got a liquidity map level here that's gonna give you protection a little bit. It's just kind of stacked right here. And so if we get in this range, I like that range.
Sean, what's the name of your value profile? Because mine don't look like that.
I just customized it. So yours, if you get the VRVP right here where it say row sides, if you go into the settings, they put it on 200. And then where it says value area volume, put it on 100. And that what makes it look like that. But this is the same indicator. Like it's just when you hit indicators and type in VRVP, it's that one. And you just go into the settings and change that row size to 200 and the value area volume to 100. All right, so let's take a look at SPY. This weekly candle is
Hey,
kind of
Shon.
looking. Yeah, go ahead.
I was going to tell you, yesterday I was looking up on the book chart, and they were telling me, so I was asking about these to give me some information, you know, to try to learn more of my insight. Then I go, well, give me a ticker. So I gave him the meta, and then I gave the daily or the weekly. And then I told him I wanted to do a leap, and he goes back, oh no, you probably got to do, he goes, look for a leap put.
Yo, I couldn't hear your phone was breaking up. I couldn't hear the last part you said.
Oh, that's all right. I'll try to get back up. I'm just kind of driving this one.
I got you. All right. All right. So when we talked on a call, I hate I didn't record that call, and I apologize about that. But when I talked to you guys on the call on Sunday, I was explaining to you all about the SPY that we can see early. And I know that sometimes it be clicking and sometimes it don't click. I don't know. But and I think it does click, you know what I'm saying? I think, you know, so you gotta, when you're looking at let me see, I'm trying to see what call I had, what position I had, if I even posted it. I don't think I posted it. You know, I had posted it, the spot trade I did on that I swung traded. It was a swing trade, right? But so even though SPY was pushing up very bullish, right? And we had a course that we could get to 700, right? We had a path to 700. However, we could see, you see, when you start seeing the candle start closing in the inside of the WTMA, right? It hadn't crossed over yet, right? And just, you know, committed to this down move all the way yet, right? We haven't even lost the 12 cloud just yet, right? But we can see that the WTMA has got really skinny and narrow, not supporting like that up move. So the WTMA, when you're in an up move and it's like ready just to keep running, you see how wide it gets. You see how wide this cloud is. It's just wide, right? That means it's in support of that trend. When you see it start to narrow out, that means that it's trying to allow, you know, the trend to shift over, right? And so here we got this push up, but when anytime you see your candle start closing in the inside of your WTMA, one or two things are going to happen. You're finna lose that trend, right? It's going to try to shift the trend altogether to change the trend direction and start making lower highs and lower lows, or it's finna allow the stock to just try to put in a higher low, right? So if you just pay attention to when you see how we're pushing up, let's zoom into this for a second so you can kind of get a better understanding of it. Okay, we were riding up the WTMA, right? Price is riding up, price is riding up. We start slowly creeping from being comfortably above it to slipping us to the inside of it, right? We get in the inside of it close here with a red candle. We under it right here, and then we come in, we put in the higher low, and then we break back out. We get back above it. We start getting the inside of it. We put in the higher low. So when you start seeing, so when coach starts seeing, okay, now we're getting red candles coming in, closing under the WTMA. We get an arc candle here because it can touch this red line. This red line is not the WTMA. The red line is the WTMA signal line. And so this green line is the WTMA. So an arc candle is the WTMA's floating candle, right? So it's the same thing, but I call it an arc candle. And so we have this open and closed candle under the WTMA. That's letting me know that, okay, institutions from a liquidity level, so the 12 cloud, don't get it twisted, it's not it tracks liquidity somewhat, but this is our short-term trend detection. So it's going to tell us if the short-term trend is still intact or not. The WTMA is a liquidity engine. When they start moving money around and start getting out of the trade, when they start losing commitment to the up move, this is what the WTMA is tracking live. It's tracking liquidity, right? And so it's tracking their liquidity and volatility. And so when you see candles start dipping back in the inside of it, it's letting us, it's a red flag saying, hey, they're starting to trim their positions back. You know, they're not buying the dip or they're not buying in with us at this point in time. They're starting to sell a little bit. And so when you see that in, that's why you start seeing my tone switch. When was this start happening? On October the 30th on up. I was like, hey, don't overexpose your portfolio. Um uh Start get a hedge, get a hedge of protection. Even if you got a long dated contract, start get at least a put on the SPY, put it out some weeks and things like that. Because when I start seeing this, even though the trend looks good, we can see them selling out. So if we didn't have the WTMA on the chart, it would just look like retest of the 12 cloud, right? It would just, if we didn't have this green and red line on our chart, all this would just look like we're just bouncing and retesting the 12, and no harm, no foul. Just keep rolling, right? Let me see. I almost got two of these on. Okay, let's see. So without the WTMA, this right here catches you off guard, right? Because you're coming down, you're on a normal retest, retest, retest. But with the WTMA, we know that much more than just a retest is happening. They're trying to slide out of the trades, and they're getting more defensive and taking money off the table because we can see that liquidity engine. Okay, so for now, what we're looking at is SPY look like it's heading down toward. Hold on for a second. Oh, that's my little daughter coming up here. All right, so now that we see that SPY is under this liquidity level, it hadn't opened and closed under it yet. However, so you can see that, and you look at the, I think I was looking on Robinhood or something, but it's already down here at this first 672, 38 level. Can grab liquidity here, right? It can come down and grab this liquidity, dead cat bounce. Because if you pay attention to the volume profile, it can do some damage in this range up here to really frustrate you if you're not careful. And so it doesn't matter if you trade SPY or not. If SPY is moving like this, that means other stuff is moving like that too. So when we're looking at it, you have these liquidity levels here, and SPY can bounce up and down in between these levels, right? So let me see, we got what levels per on. So we see that it has some liquidity it can grab here. One technique I like to use, and I want you all to start using this too. You see how I had like the 5 hour, 6 hour, 8 hour, and things like that. You can even create like a whatever 6.5 hours is in minutes, right? Create that. What that'll do is it'll allow you to have a daily candle. So the stock market daily candle is 6.5 hours, right? So if you got like a 6 hour candle, or you have enough minutes that equals 6.5 hours to get a full daily candle, what that allows you to do is go into extended trading hours with higher time frame candles. Because if you go to the daily time frame, you're not gonna be able to see candles in the extended hours at this size, at this type of high time frame. But since I got like 8 hour candles on here, I can go to an 8 hour chart and kind of still see like a holistic view of what the price action is looking like in after hours, even with these larger candles, this 8 hours worth of time, right? So we can see, I'm just looking at this, and I'm looking, okay, we got open and closed candles under the 12 cloud, WTMA cloud is super narrow, looking like it's ready to kind of, allow this reversal. We got defense right here, saying we got some good, you see how the WTMA lines up perfectly with the VRVP because both of them are tracking liquidity. And so the WTMA is bending right at the right correct spots because it's kind of wrapped around its highest volume concentrated area here. So we know that just me looking like this last line of defense right here is very important to avoid SPY from kind of dropping aggressively back into under 670. But like I said on the Sunday call, when we drop, because I was looking at all those gaps in the chart in the VRVP, I said when we drop, it's gonna be one of them type of sell-off when it's gonna kind of like keep going. You're gonna think it's gonna stop, but it's gonna drop pretty fast. It's gonna drop aggressive because we didn't have any volume on the way up. So if you look over here at this VRVP, you see how we had this little pit stop area here, but for real, we just, it's nothing. It pushed up too aggressively with all these gaps in the chart. So it just wasn't much to stop us from correcting. And so you can also flip to these, put yourself a 6-hour chart, or do like 6.5 hours, right? 6.5 hours, but base it off of minutes, right? 60 minutes, 600 and whatever minutes, right? And you can do it like that. And you can have a daily chart that you can see in extended hours, where you can kind of get some do some technical analysis, looking at this post market price action and stuff like that, and seeing kind of where other order blocks are located and kind of where stuff is going. So when we're looking at when I'm looking at SPY right now, it's coming down to where money is. It's naturally going to try to come back down to where these order blocks are. And so I'm gonna go back to regular trading hours, but we can see where the money is, right? We can see where the liquidity levels are. And so we can also see where we kind of in a bad spot, because there's nothing here to catch us or stop the drop from happening, right? And so we got the 12 cloud trying to cross the TMA cloud, and we're pushing down toward these liquidity levels. And so at this point, what do you do in this situation? You play puts, you play the trend, just like you will play calls if we was in a bull market. When you're having like a short term pullback, don't be afraid to play puts, and don't overthink puts. Matter of fact, I want to encourage you all to stop overthinking so much, because the same way you can take screenshots and get help with your trade plan with Black Wolf or calls, guess what? If the stock is in a bearish trend, he gonna give you the same advice, but just to the downside, right? He's gonna say, wait till it pop up and hit this 200. So for example, if I was trading live with you, or if I was giving you a trade plan on SPY, and say if it was down here tomorrow or it popped back up, this is great, but the best puts would be a retest of that 200 cloud, or a rejection, or a push up to this liquidity level at 678, a fresh bearish arc, and then you get into your puts, because you still want to buy puts as close to a resistance level as possible, right? So that's what kind of how you want to buy puts. You want to buy calls near a support level, or at a good breakout, like a trend line break or something like that. But when you buy your puts at the resistance levels, and you allow, because see, you got to always remember, let's take everything off the chart. If you, and for you all to do YouTube videos or trainings, if you just want to clean your chart up, you just click this little hide button right here. You can hide indicators, hide drawings. So I can hide my drawings. I can hide my indicators and have a blank chart quick. And then you don't have to delete your stuff. You can just, put it back on. You got to understand, when something's dropping, it's dropping like this right here, right? It's doing like it's dropping down, and it's coming like in this shape, right? It's dropping like that. So when you're buying puts, you got to understand, stuff is still going to make market, market structure. So if SPY comes down, say it sweeps liquidity here, it's going to want to come up. And even if it comes all the way back up to here, right? Bears will let it do all that. They just don't want it to, so they let it do all that so they can get this move. All they don't want it to do, they don't want it to break back over the high of this candle, because that's what's going to create a new trend. So they'll let people buy in and push it back up, and they get your hopes up. All they worry about is, okay, since this right here, we're making a downtrend in this structure right here, we got a lower high, and then we got a lower low. So we got lower high, lower low, lower high, lower low. They just want to come up here and make a lower high. As long as that price doesn't get back above this candle, the high of that candle, they will let you have all this move, because once this thing does another bearish arc, they trying to run this thing all the way down to make a low lower than this low. So you got to always be thinking about that and don't get caught up in, okay, it broke this level and we had this long extended drop. Let me just jump into push and try to run down with them here. You can let them have that. If you don't get in and you don't get on the fresh bearish arc and the rejection, you can always let them have that little pop up. Because if your 200 cloud is down here or your 12 is down here, and then you inverse arc into it, you can safely get back into puts and look for the next leg down. Just like, we've been doing on Meta. Meta been popping up and it looked like it's about to reverse. You get excited, you might, okay, this is the official reversal. But all it's really doing is just making that same market structure, right? So when I zoom out, what do those little pop-ups get you? It ain't getting you nothing but that same pattern, right? It's coming down, popping up, coming down, popping up, coming down, popping up. It's just doing that same thing, right? And it's still in this big downtrend, right? So it's just sliding down. So all them little pop-ups, and you think, okay, now my position finna get saved. It's just coming up. They letting it do that because they want to jump back into puts for a cheaper price. Because if I'm getting into puts and if I'm trying to get into puts and Meta comes down to 646 and I want to get into puts or whatever, I want to get into the puts at 660 because now the puts that I want to get are cheaper. It's a better risk to reward now because I don't have to worry about it reversing on me too quickly. So if I can get in high and it's still not above the lower high, I can let it come down, pop up, reject, and then push it on down and get in safely if I'm following the market structure correctly, right? And so the reason why I created the WTMA to help us with that is because it actually follows market structure, right? So let me delete this off the chart. If I delete this line off the chart, right, and say we looking at Meta, we know that Meta is pent down under the 200 cloud, which is bearish. So we looking for puts on Meta because it's under the 200. And so when something's stuck and pent under the 200, it's not time to try to be aggressive in calls and stuff like that because it's under your 200 moving average. That means it's bearish by default, right? And so let me zoom in a little bit and we'll see. I'm going to turn off these. Let me turn off that right quick. We can even take the cloud off and turn my WTMA back on. You see how the WTMA by default, look what it's doing. A lower high, lower low, lower high, lower low, lower high, lower low. It's following market structure for you. You see that? So it's really no reason to fight it. You know what I'm saying? Like when you're trying to buy puts, it's coming in. When it does an inverse arc, that means that it's finna try to come back up. If it's bearish like this, it's trying to come back up, put in the lower high, then it comes down, inverse arc, you put in your lower low. And what else is it doing? Look what it's pushing and doing. Change the character, come back up, put another how you breaking after the bearish arc, break a structure, push up, break a structure after the bearish arc. It's leading you into your breaker structures, it's leading you into market structure. So it's guiding, it's like pretty much following market structure and timing the drops as you coming in and making these lower highs and lower lows the whole way down, right? And so as long as you're paying attention to what's happening, right? The stock is bearish, so you need to be looking for, okay, has it put in a lower high, like when am I getting my arcs? And what's under me after I get an arc? And that's all you need to be worried about. If it's an A+ trade under you after an arc, if you're pushing up and you come back and rejecting for a second time at bearish order blocks and stuff like that, that's all you really want to see to justify getting into puts on something that weak. And so that's why I like to pick on stuff that's weak already to buy puts because it's just easy. Everybody's buying puts on it. Nobody wants calls on it. I'm talking about the people with the money. Nobody wants calls on it. And so it's just bearish and it's pushing down. And we just needed to come down to a level to where it's just at like really, really good support to justify even taking a risk on calls, right? So that's why I'm waiting on this level on Meta. But if you look at the the overall bias on it, it's just extremely bearish, right? And so when we turn our 200 cloud back on, you got to pay attention to like where stuff is, and it's kind of it's bearish. It's under the 12, it's under the 200. Right here, the same thing. It was under your 200 cloud, under your 12 cloud. So it's in a bearish trend. And so you just kind of want to ride that momentum down and just time it with your puts and calls, right? Somebody had a question? All right, so this is some business I want to cover for the Discord. I put a message in there about grabbing some a stock list or creating a stock list. So we're going to organize in the Discord when we need to start having. So what I'm gonna create in here is an A plus trade channel. Now this A plus trade channel is gonna be kind of where our trade ideas and stuff are. But what I'm going to do is I'm going to find stocks. Just like we had a stock list, for example, if we take this list right here. And this, I just feel like will help people not have to trade by themselves, even though we all in here trading. Like, for example, if we take this list right here. Now, I do like what I like Fidel's, how he does his sorting and his automation and things like that. I think Brown Wolf does a lot of stuff with Fidel. These lists like this right here, just massaging this data, right, to pick and find things like right now, we need to look for stocks that have high PE ratios. I did a search on Black Wolf. Let me see, chat. I'm gonna show you all what I did to help with this little task that we're doing. Where is it at? I think it's under this one. Oh. So I want to start sorting through the stocks to just have a hit list, right? Let me see, auto UV. Okay, so I pulled the top 10 high PE. And so this is what I did to press the AI. Initially I told him he was going to be in an AI competition. In the AI competition, he had to create a list of his top 20 stocks with high PE ratios, right? High PE ratios, which is price to earning. And from that list, he would compete in a short need stocks and stuff like this. So I asked him which 20 stocks would he pick that's based on having like a high PE ratio. So it gave me the top 20. And but then this is a top 20 list of stocks in that position. They got Palantir on here, Roblox, Nvidia, a lot of these we know, right? And so then it wanted to say, okay, look, it gave me the probability and gave me all the forecasting, stuff like that. And then it broke it down to a top 10. It wanted to say, let me just do a top 10. And so now I came up with these top 10, right? And so I'm going to drop this top 10 in the Discord. And what I need from the pack is we need to go through these, comb through these. If you're good at spotting A plus trades, and let's get it down to which ones are the A plus trades, or just get a list out to you guys so you can come up with trade plans for these and see if there's some opportunities within inside of these top 10 or even the top 20, right? And so we'll look at these stocks because another thing we're going to be looking at is stocks is inside of supply zones and just now leaving them. Like, for example, like MU has been just running up, but in the same thing like SPY did, it did a lot of running up, but not a lot of consolidating in the run up, right? So it just was running and running and running. And now it's in a position where it doesn't have like too much, saying, support. You see how it has this big gap in the VRVP right here, all the way back down to almost $200. So when this thing starts losing the 12 cloud, it is in the same position SPY was just in. It doesn't have enough. It didn't do it. It just kept going up. It didn't spend enough time consolidating. And so when it starts dropping, it's just gonna drop, right? So it's not gonna have the support that it needs at certain levels to stop it from dropping. Like right now on the 2 hour, you see how we got an open and close under the 12 cloud. We got a bearish arc. We already swept, but it's not responding well. Like you see how it peaked under the order block, but it didn't pop back up aggressively or anything like that. So it's not really responding in a way that is showing that it's going to try to hold up. So they may abandon this position, and you see how it ran up aggressively, but it didn't leave anything. So this thing can get back down to 200 like quickly. And so we want to, keep our eye out for stuff that's just now leaving, saying these supply zones or these order blocks. And it's with confirm arcs and stuff like that. So we can look at the 4 hour chart. And these are some that you want to do like top down analysis on stocks. I'm going to find a list of these that are leaving order blocks, just now losing the 12 cloud. You see how it has an open and close 4 hour candle on this 12 cloud. It got a bearish arc, but you also got to look at this gap in the VRVP. And I can zoom out. Let's just zoom out some more and see where the volume is. So even if I zoom all the way out, you see how it just does not have volume to stop it from just getting wrecked. You see that? so it just ain't nothing there, bro. Like the WTMA ain't nothing there. So it's when it started dropping, if from volume coming in while it's dropping, this thing dropping. Okay. So we want to be looking for stuff like this and doing a trade plan for them. Does anybody have any questions before we jump off?
I have a question.
Go ahead.
I'm reading. Hold on. So when you have mentioned before that when a stock is dropping very fast and then it pulls back up to the WTMA or it will create like a lower high. What's your favorite time frame to catch that? Because I know like maybe the 5 may be a little too premature.
Mm-hmm. I mean, if you see, like I like to see liquidity sweeps. So the liquidity sweep is what starts that, right? So that's like what we saw with Palantir, for example. We saw Palantir on like a 3 hour chart, 4 hour charts. Once you see the liquidity sweep happening, right? So like for example, let's go back to Palantir. I'm gonna show you what I mean by that. So what I'm saying with something like Palantir, for example. Okay, so it has this order block here. You see how this wick came down and it pushed back up inside of the order block? All right, so this candle happened like first thing in the morning. So when you see like the liquidity sweep happening, like we did with Palantir, on the 5 minute, if we go down to like, let me see, where is this? Here. Tuesday, 8:35. So yeah, so on a lower time frame, you will see it happening, but it doesn't look as dramatic, but you can catch these candles pushing up to support, right? So it came down and swept liquidity at 180, 185. And so when I did the call out, I said under 186, it's going to liquidity sweep. It came down and it started jumping back inside that order block. On a lower time frame, you can catch a move pushing back up to the support or something like that. But you want to see the liquidity sweep happening, man, at least on like the 1 hour. They do happen on lower time frames, and it really just depends on the order block. Like these swing order blocks, even if you're on a 5 minute chart and stuff like something like that, it still can grab liquidity and pop back up. But it just depends. So like right here, you see how I'm on the 5 minute time frame, but I have this liquidity map level. So even though I'm on a 5-minute time frame, if it drops down under this level and then pushes back up, I'm still gonna play it because even though I'm on a 5-minute time frame with a 5-minute time frame swing order block, I know this is a daily time frame liquidity level. So I'm still gonna respect it because I know this is a daily time frame level. You get what I'm saying? But I prefer to see it happen on like higher time frames. But these lines represent the higher time frames.
Thank you.
No problem.
Hey, Sean.
Mm-hmm.
In the bottom right corner of your
Yep.
chart where you have
Yep.
Palantir, how do you get that section up to come up?
Which section? Tell me this chart, this thing.
Keep going to the right where you see that 190.74, all the information on Palantir. How do you get
Oh,
that to come up? None of that ever comes up on my screen.
hmm. Man, it's always been
I
there.
think you've got to expand the line right
Yep.
above PLTR. If that line is he's probably pressed down on his screen.
Okay. Yeah.
I
Yeah.
tried.
Okay. Yeah. That's always been there on my chart though. I'm not sure. Yeah.
Hey, Sean.
Yep.
Hey, quick question. Sorry, I joined the call a little bit later. I don't know if you guys already talked about this in the beginning or not, but just going based on the text that I sent you yesterday on Friday. For the entries, when we have a level 3 confirmation and we're doing a swing call, so let's say we have a floating on a daily,
Mm-hmm.
floating candle on daily, like when do we enter, right? Right before the day ends, or we wait for the next morning?
Okay, so if you get a floating candle on a daily chart,
Or
you're
any time frame, I guess. Like
yeah.
let's say I'm talking more about the higher time frames.
Mm-hmm. Yeah. So if you get a level 3 candle,
Yeah.
you get a level 3 candle on the on whatever time frame you're on, you can enter. So you want to enter that candle, enter off of that. So that the candle is just letting you know that the breakout is confirmed, right? Or the trade is confirmed, right? But from that confirmation time frame, your entry time frame is going to be on a slightly lower time frame. So if we go here, for example, if you get a daily candle, right? Let's go to cheat sheets. Oh, this thing is getting pulled up. Let's see. Let me try to find this for you right quick. Mhm. All right, so this wolf chart time frame guide right here. You see this? It's from
Yes.
all right, this is the date right here if you want to go look for it and download it. So here, I'm gonna open this up. All right. So this right here is your guide for entry.
Okay.
So if you get a 1-day time frame level 3 confirmation or a 1-day time frame ARC confirmation, whatever confirmation, your primary entry time frames is going to be on either the 4-hour or the 2-hour, right? And so all you want to see from these, so what this does is it helps you not to have too much drawdown, right? So if you get a confirmation on a daily time frame, once that candle closes, right? Once that candle closes on the next trading day, you want to see either an inverse arc or or I'm saying, say if it was calls, you want to see either an inverse arc or you will see a trend line break on that lower time frame, and then you can enter in with more precision instead of having like a lot of drawdown in a trade.
Are you also waiting for a retest of a support level if you're dropping down to a lower time frame?
Yeah, so what if the stock is pulling back, you will see it pull back to either a demand zone and then do a fresh inverse arc, or you'll get like if it's going to keep breaking out. So sometimes you know how you will get a level 3 and the next day the trade is still breaking out and going up. You will see another either another trend line break or inverse arc with momentum to jump into the trade with better timing.
Okay, so the fact that we have a level 3 confirmation on a high time frame doesn't necessarily mean that we have to enter right there and then.
That's
To
correct.
confirm that more, we kind of like have to wait for, let's say if we're on daily, we have to wait for the next day at open and see what's happening on the 4-hour and 2-hour.
Yeah, you can enter in. You try to enter in from the 2-hour or the 4-hour after the confirmation is locked in.
Okay.
Yeah.
And same like following this guide, if it's on the weekly, then we go on 3-day and 1-day and so forth, right?
That's right. Yep. So if you get a weekly, you'd be on the 3-day or 1-day for the for your entry.
Okay, and then just to confirm what we're briefly discussing, so if there is a candle in any time frame that is not touching the WTMA, and it's far from it, so that's an early confirmation. But if that's a green candle, that's a confirmation that you can enter. But if it's a red candle, still not touching the WTMA, would we have to wait for that to go to a support level and see
So
how that reacts, right?
yeah, so for the WTMA, what you want to wait on is you're going to get a candle to open and close over it, but you want to wait more importantly for that WTMA, that green line to cross over that red line.
Yeah.
Yeah. And once you get that, now so the rule is when you get a red candle means that you probably gonna have a pullback to support, right? So then when you pull back to support on the lower time frame, like you get a red candle confirmation, but you still got a confirmation, but it was a red candle. You wait for it to pull back to support on a 2-hour time frame and give you another confirmation on this lower time frame in that trend direction, right?
Got it.
Now the other thing that you can do to help you with that is if you get a daily chart confirmation, for example, once you get the daily chart confirmation, you can also take a screenshot of the 1 week, the 1 day, the 4-hour, and the 2-hour time frame, right? Put it into Black Wolf and then let it evaluate the playing field as well, and it can guide you on okay, you have a 1-day time frame, level 3 confirmation. However, you got resistance on this time frame. You got whatever it's gonna see everything, and it's gonna say, all right, the best entry is at this price level. Once you get the price level that is recommending that you can enter in, you can put the alerts on your chart, and then once say the price comes down to the level it told you to enter in on, you can also then go to once the price is coming down to that level. If you want to get a more precise entry, you can take the 2-hour chart, the 1-hour chart, or 30-minute chart, and just put it into Black Wolf as well, and say, okay, prices at the entry level that you that we had in the trade plan. Do you see anything different that'll prevent me from entering in at this this price point? And then it's gonna keep working through the trade and give you like pinpoint, where you need to enter at, what your take profit is, what your stop loss need to be. And then so that way, you can have like it assisting you in the entry and in the whole entry and exit process. So you can use that as a tool as well.
Thank you, sir.
Yeah. Hold on for a second. All right, I'm back. All right, I got 10 more minutes, and then we're gonna wrap up. Just in case anybody else has some questions. And while we're waiting on questions, so another thing I wanted to show you guys is, so I know some of you all have access to, I think everybody does have access to these private trades. So these trades inside of private trades, these are our beta testing trade signals. So the only thing in here that's kind of, off a little bit is this AYN buy signals. Some of them are off, some of them are delayed. I think the 4-hour time frame ones are pretty decent. So just make sure you all are checking through here. I'm still trying to figure out saying, how to get these daily time frame buy signals more accurate. But it does have a lot of different trades and stuff in here, cloud breakouts and things like that you all can look at to help with guys, especially in the after hours, like when the day has ended. Like right here, we had these 3 p.m. Signals, right? So at the end of the trade, this right here helps you to prep for the next day, so you're not guessing a lot and you really just focus and doing homework on stuff that's already being vetted. Like for example, like we have a 4-hour 12 cloud cross, right? And so it cost popped up on here. Microsoft might be crossing to the downside, right? So if we look at cost, we can go here and look at them on a 4-hour chart. So I put this signal into the Discord when it was around like at 230 something. I'm not sure what exactly price they were at. Let's see. All right, cost. So cost, add cost to top down watch. They were at 234. I was seeing them stuck inside of this weekly order block, right? And so now they're at 940, right? So they made a decent movement today. And then here on the 4-hour chart, you see how we looking at the 4-hour, it's picking up, it picking up this, let me see the cloud. It's picking up that the 12 crosses bottom half of the cloud. It's going to eventually try to break through here, but it is running through traffic right now. But, it's dealing with this inverse arc. We got an AYN buy signal down here on cost. It's, reclaiming that. It's going to come up here and reject, at the 200. But basically when I say put it on the top down analysis watch, that just means give it to Black Wolf and do a full top down on it to see exactly if it has something to offer to make you some money, right? I believe it does because it's been dying for what? I don't know, a long time. Like it's been just dropping and dropping and dropping and dropping. We got earnings coming up in December. They beat earnings, last earnings. So they've been beating earnings for a minute. I also like that, their forecast is decent. So they way down here at the bottom of it. Just the average price they expect it to be at is around like 1,074. And so I like seeing stuff that's kind of like when the market is bleeding off and something has been bleeding for like a month before the sell-off, and smart money is trying to rotate into something that's undervalued possibly. They just start looking at stuff like cost. And so I just kind of like I like that they were inside of a weekly weekly order block. The 12 cloud is kind of getting really close to the WTMA. So if it does create an inverse arc, it's going to accomplish getting above the 12 cloud pretty quick. And so, and it'll be, back at like 980, 990 and things like that. The WTMA is like setting up shop up here. So it's not going to try to let costs do anything extreme. So once it gets into like this 980 range, it looks like it's ready to kind of like, stand its ground because it's kind of wide. It's so wide right here. And so, but it is still, that still offers you like what, about $50. And so I like the setup for cost. Even though it's running through traffic right now, it's like once it gets over this order block and stuff like that, it kind of has a little easier path, to come to these little levels, and you can day trade them and things like that. So just make sure you all are paying attention to like my trade plans, working together, to conquer these alerts. It's a lot of them because we're tracking a lot of stocks, but it seemed like a lot. But when you think about it from a daily basis, say if you were trading yesterday and you got these type of signals from yesterday, and then tonight, say you only focus on stuff that had daily time frame, ARC confirmation system alerts, right? You're really only dealing with what, one, two, however many this is, not many stocks, right? So it's giving you a list of stocks that recently got daily time frame ARC confirmation. So we take like CEG, for example. doing CEG, and it's looking at the daily time frame, and it's showing you what a good trade, right? You got a bearish arc, it's breaking under the cloud, and you see what I'm saying? But it's already vetting that for you. You see what I'm saying? So you got a bearish arc, you lost a 12 with an open and close candle, and it's pushing down, so it's already tracking stuff that's having these what is this CRWV? What is CRW? I don't know what that is. Let's see.
Sean, can I ask you another question
Go
before
ahead. Yeah, go
we
ahead.
wrap it up? Sorry, probably well, first of all, I wanted to thank Pretty Hustle because I was able to watch that video for the screener
Yeah.
for the market high and low. But I was wondering if you have or if you can make a video for us with the screener where we can hunt these areas for the inverse arc. So maybe we can share with the pack, every time that we find a ticker that is in that level, it is in that situation, and everyone can keep an eye on it,
Yeah.
Because I've been trying to play around with the filters, but it's very tricky. Like if it has to be below the 200, above the 200, or below the 12, or under the 12 for the price, and I keep getting like different tickers with different scenarios. I've made a couple of them work. Actually, were pretty good trades. But I was wondering if there is any specific filter, or I cannot find the 200 WMA on the filters. It gives me only the EMA, so I don't know if he has anything to do with that.
No, so TradingView doesn't have the WTMA, but if you're trying to filter for the 12 cloud, what you can do, for the 200 cloud, you can filter for the 200 SMA and the 200 EMA. So filter for both.
I actually have both of them.
Yeah, so if you do that for the 12 and for the 200, it'll filter for the cloud because they represent the top and bottom on that cloud.
Correct.
And then so the WTMA is a moving average that I created, so it's not inside of any
on the screen, like we cannot
any
find
screeners.
it.
Right.
Yeah.
But
so what do we have to hunt for to get to these stickers that may have levels that are close to crossing the 12 or the 200, or maybe like getting the inverse arc? Like, is there a specific way that you hunt for those zones or for the demand zones?
So you trying to find stuff that's getting a arc confirmation, or you trying to find?
That it's about to reverse. Like let's say, for example, if it's been red all this time and it's about now to turn.
Yeah. So that's what this is right here. What I'm going over right here.
Yeah.
All this tab right here where it say swing trade ACS alerts.
Yeah.
Everything in here is stuff about the turn and reverse. Like literally everything in here. Like you see how I just clicked on I can pick any of these in here, like anything in here. Lift. If you went to lift, that's why I'm saying why it's like it's already a screener. This is the only this is the only way I could screen for hold up, what is that? LYFT. So LYFT. So it is our screener, right? You see how if I zoom into that, this is a daily time frame. It just crossed over and closed on lift. You see that?
Yep.
So literally everything under this tab is stuff that's about to reverse. And for the lower time frames, everything under the 15-minute inverse arc and 15-minute arc, these are for the 1 hour, 30-minute, 15-minute time frames. Literally everything that pops up under here during the day, every hour during the day, is a stock that's about to reverse. You see that?
So that's the screener basically that we need to follow.
This is a screener. Like we got Tesla at 10:30, right? 10:30, it had a bearish arc puts, right? So if I go to Tesla and go to the 1 hour chart, what time? 10. So 10:30, right? So if I go to 10:30 on Tesla, which is here, right? That's 8:30. That alert seemed like it was a little delayed. It picked it up late. Not sure why I picked it up late, but this is the only inverse arc I see on here. But these alerts down here under 15-minute and 1 hour and 30-minute, these are our alerts for within inside of the trading day, right? But these don't track anything but inverse arcs and arcs, right? All throughout the day, every 15 minutes, every 30 minutes, every hour, it tracks those alerts, right?
All right,
And
that
then
sounds good. I'll start spending some time with those.
Okay.
Because I've been trying to set it up from TradingView.
I got you. All right, guys. Well, that's my time. Just if y'all have any other questions, we'll do it. We're gonna be doing another train. I'm gonna be doing more of these more frequent like I used to. So I'm trying to be more consistent with the trainings now. So we all can kind of get a feel of the Discord. If there's anybody that can take responsibility and help massage some of the trades out into like smoother, smoother list, right? So that people can kind of get to them quicker or see them clearer. I know we have this group here, the Black Wolf group. You all be talking about stuff. So guys, if you struggling getting good with Black Wolf, we have a whole section of mastering Black Wolf. They have some really good strategy in here. Ways for you to get your trade plans looking really nice and neat and easy to read. So take advantage of all these groups and all the resources. And I'm gonna keep trying to make it simpler and kind of. I know we got a lot of data in here, so I'm trying to organize this in a way to where the stuff will make sense. So I'm gonna create an A+ trade section in here. That way we can filter out every week what are the top five stocks we're looking at with those trade plans so that we can have some things to focus on as a group. So that's what I'll be pumping out really this week. I'm gonna put an A+ trade group in here, and then we'll filter through a lot of stuff, and the stuff that really stands out, we'll drop it in the A+ trade so we can have a focus list for the entire pack. And then we still have everything we already have, but we at least have something to focus on. But I appreciate y'all, and I'll see y'all in Discord, all right?
Thank you.
Appreciate it,
That was
sir.
awesome.
Appreciate it, sir.
Thank you, sir. Have a great night.
Thank you. Good
Thank
night.
you.
Uncle Sheezy.
You.
Crap.